Hey everyone, and welcome to another episode of Pathfinder presented by Payload, the leading digital media company in the space industry. My guest today is an industry veteran, Chris Celtruda. He's worked within aerospace and defense for 30 years, more recently serving as the CEO of Kellstrom Defense, then as an operating executive at the middle market private equity firm ATL Partners, before becoming the CEO of an ATL portfolio company, Valence Service Technologies. We discuss his background, his management style, and the investing landscape of the space industry today. Before we jump into all that, a quick word from our sponsors. SpiderOak's Orbit Secure software is designed for hybrid space operators struggling to manage the chaos of securing data flow and access to and from tens of thousands of small satellites in low Earth orbit. Using a unique combination of end-to-end zero-trust encryption and blockchain distributed ledger, Orbit Secure allows your mission to orchestrate and secure Earth-to-orbit, orbit-to-Earth transmission, communication, and storage of sensitive data across even the most complex and unsecure hybrid space environments. To learn how Orbit Secure can bring zero-trust security and resiliency to your zero-gravity environments, check out SpiderOak at www.spideroak.com. Chris, welcome to the show.
Hey, glad to be here, Mo. Appreciate it.
I see the sunny windows in the background. You obviously are in California. I'm looking out my window and it's very dark and dreary. It's been like this for the last 3-4 days.
Yeah.
So I'm jealous.
I'm in El Segundo, California, near the Los Angeles airport, and it's a beautiful day here in the heart of the West Coast Space and Defense Hub.
Well, I appreciate you doing this recording today because I know you just got back from vacation. Where were you?
I was in Hawaii. I was in the Big Island on the Kohala Coast north of Kona for a week. It feels good to be back. And true disclosure, I was up at 4 o'clock every day, doing calls. It's just the nature of where we're at in the cycle right now.
Exactly. Well, Chris, really appreciate you being on the show. Thank you. You're an operating exec at ATL Partners. You're also the CEO of an ATL portfolio company, Valence Surface Technology. But before we get into all of that, can you tell us a little bit about how you got into the industry, aerospace and defense in general?
Yeah, no, I'll give you a little bit of a background. I've spent, at this point, over 30 years in aerospace and defense. My early career was a function of technical path. I studied engineering as an undergraduate, went into signals intelligence, the interpretation of electronic signals, mostly for defense classified applications earlier in my career. As that career progressed, I moved into project and business leadership, at General Dynamics and Honeywell and other large public companies. About 15 years into my career, I moved into the private equity space and held leadership roles with a number of funds, defragmenting portions of the market, making investments in space and aviation and defense. The last 10 years, I was the chief executive officer for Kellstrom Defense, which was a roll-up of special mission mods for both domestic and international military aircraft. And more recently, I've been with ATL Partners as an operating executive. I took a leadership role at one of their portfolio companies, Valence Service Technologies. And then I also sit on the board of Lightridge Solutions, which is a space domain, national security, electro-optics payloads business. So I spend a fair amount of time with both assets, working on strategy in defense and space.
Amazing. Well, so it sounds like aerospace and defense was always in your blood.
Yeah, no, I come from a kind of a long line. I think my grandfather worked at Grumman before it was Northrop Grumman. My father worked for General Dynamics at a point in time, and always had an interest in technology development, deployment of technology both for commercial and space and defense applications. And it's been a good road, and I think we've got great road ahead of us.
Did you grow up in the West Coast?
I didn't. I grew up in the Northeast. But I've spent, probably the last 20 plus years on the West Coast. It was, part of the career migration. And, I think, the relationships and the opportunities have been very, very strong in Southern California for me. And it's an election that I've made to stay West most of the last 20 years, just because there's been great opportunity.
So you're in El Segundo, which some would argue is the heart of the movement, especially the new movement in new space that we're seeing. I'm kind of curious, was that from your experience, was Southern California, El Segundo, always the way it is today? Are you seeing anything different in your time spent here than when you first entered the industry?
Yeah, it's a little bit of a transition or a rebirth. So, when I first came to the El Segundo, the South Bay area, it was in the legacy wake of Hughes and TRW and some of the, maybe old space and old defense electronics pioneering organizations. And we had a space boom 20 years ago that was led by Iridium and Inmarsat and other types of technology, and we reached a continuum with largely a geosynchronous solution, wide field of view and a traditional coverage type environment. I'd say in the last 5 years, with the emergence of SpaceX here in Southern California, and then the addition of Rocket Labs and Relativity and a number of other new space players from Long Beach to El Segundo, pretty massive revitalization, both in terms of new space companies and the traditional players. I would contend, Millennium, which is now part of Boeing, and Raytheon, and Northrop Grumman, which has absorbed the old TRW and some of the old Hughes assets, have seen a similar rebound. So it's pretty exciting from a community point of view to see, kind of critical mass of the old and the new space converging here in the greater El Segundo, South Bay in California.
Right. Well, let's talk for a second about ATL. So, you've recently joined ATL, if I'm not mistaken, right, as an operating executive, and you can define what recent means. But
Yeah.
talk a little bit about what is ATL. What does the firm focus on? It's not just A&D, and how does A&D fit into the firm's broader strategy?
Yeah. So I was involved with some other investors and sold the last project that I had in the 2019 timeframe. I stayed on for some integration with the new investment group, then took some time off, and ATL approached me to help them develop some investment theses in the area of defense electronics and in the area of space domain payloads. So I came on board first as an executive advisor, then as an operating executive about 3 years ago. We spent a fair amount of time developing some very strategic approaches to investing in what I would call submarket verticals of the defense portion of space. And we were successful in acquiring a company in Tucson called Geost, which became the foundation for the Light Ridge Solutions platform. And they had owned the Valence asset, and there was a desire to move and pivot that business towards space and defense. So after about a year of kind of being on the bench as an operating executive, I moved into a full-time chief executive officer role for the Valence asset. And fortunately, there is a strategic alignment of a lot of the Valence operating locations here in Southern California. So it was very easy to start to connect that business to some of the launch vehicle customers, some of the satellite comm customers. Got a pretty interesting footprint in Northern California, in Washington, so it was easy to connect to the Blue Origins and the Starlinks and the Kuipers. If you think about ATL more broadly, ATL is a middle market private equity fund. Works with a number of large private institutional capital providers, and is really sector focused on aerospace, transportation, and logistics. So the ATL has got nothing to do with Atlanta. It's got to do with those three sectors. The company has made a series of investments in companies in those specific sectors, and more recently has made a fairly sizable pivot into the space market. So some of the strategic work that I came on board to participate in, and some of the work that we've done with some of the pre-existing companies to realign their capabilities to the space market, really has happened in the last 2.5 years. And I think, it's an interesting proposition. There's a lot of early stage, I think, angel venture cap oriented providers of capital to space companies. And I think there's a lot of opportunity to take a good idea and incubate that and get it to the point where it creates, profit and cash flow. There aren't a lot of providers of capital to companies that, all right, get to that early stage growth and experience the ability to be successful with a product or a service, and need a partner to scale that. And that's really where I think ATL has come in with some of these, some of these smaller players in the space domain, providing capital, providing operational experience scaling from one to many in terms of manufacturing or providing a service. I think that's an exciting thing for this market today.
Yeah. Why do you think what happened at the macro level over the last 2 years, where ATL has said that we want to spend we want to start to focus on space?
Yeah, if you think about developing an investment thesis or an investment horizon, it's really about growth, right? And if you think about the end market dynamics in the various subsectors in space, the compound growth rate, either demonstrated today or expected over the next few years, is pretty impressive. So if you think about, the example I use a lot of times is Starlink, and going from proof of concept to the ability to produce thousands of satellites and deploy them in a very short period of time. That creates an exciting opportunity throughout that supply chain, not just for the folks at SpaceX and Starlink, but for the people that provide the subsystems and the services to enable that low Earth orbit constellation of satellites. So as we looked at, both the government and defense side and the commercial side of space, it became pretty clear that the growth rates were compelling. And it became pretty clear there was a lot of fragmentation and a lot of technology development. And if you combine some of the ability to defragment that space and create scale, and then have a scaled asset right on the back of that really interesting growth rate, it has the ability to generate, interesting profitability, interesting cash flow, and then by default, interesting returns over an investment horizon.
Right. And if you were to think about ATL's, I'll let you answer this in one of two ways. How do you kind of think about ATL's? Does ATL differentiate itself from its perspective and view on the industry and the companies that it's focused on, or does it differentiate itself with the value that it provides companies, or is it both?
Yeah, no, I think it's even more interesting than that. I think one of my principal tenets for being effective in this portion of the market is it's about relationships, and it's around having the ability to bridge the gap between old space and new space, having the ability to reach out and combine different technologies to offer a bundled solution. I think one of the things that makes ATL really unique is that they can go into an owner founder oriented business or an early stage venture funded business and make a compelling case that says, hey, we've scaled assets before, right? We know how to take technology that's maturing and get it to where it can go into rate production. We have the relationships both in government and industry, have the ability to pull executives off of our board and deploy them to these companies and open doors. And I think, that's been a little bit of the story with the Lightridge project. We've been able to go out and pull in very, very seasoned people from the space domain, both from a government point of view and from an operating point of view. And as that asset has scaled and as it's diversified, we've done follow-on acquisitions. I think it's really highlighted how good the board of directors is in terms of having relationships to open doors, how good the management team has become, blended between, legacy portfolio company as acquired and then kind of blended asset as it is today. So I think ATL's ability to navigate that is unique and important.
I want to switch gears for a second and talk a little bit about management styles. And it's something that I actually haven't spoken about really at length or at depth on these on the show before. But you are unique in that you've successfully held a number of different leadership roles at the executive level, at the C-suite level of A&D companies. And I want to talk a little bit about sort of your management style, and maybe talk a little bit about what that style, how would you describe that style, and how do you believe it has contributed to the successes of the companies you've been involved in?
Yeah, let me give a little bit of an overview there. Very often, I haven't been with the company through its incubation. I come in maturity point. So the first thing I really focus on is credibility. You've got to go in and do a lot of listening, and I think trust it needs to be earned through credibility. So if you can gain credibility and respect early often by engaging and understanding how the business operates, then the credibility and the trust will follow. I'd say that the other piece that I'm very focused on is culture. And I think especially when you're blending businesses together, which generally happens in private equity. There tends to be a bias toward, hey, this business acquired that one, and then we impose all the processes and all the principles and all the ways of doing business on the acquired company. And I think the reality is you're acquiring that company for a reason, right? And very often some of their processes and culture may be, different, maybe better than the one that, that's taking the other business out. So I think the other thing, beyond credibility is culture. That's pretty important in terms of my management style. The last piece is communication, right? Like you've got to get out and lead from the front. So I spend probably 150, 160 plus days a year on the road in a hotel. Whether it's in an advisory role or in an executive role, I'm a big believer that face to face is important. You've got to go sit in the technical reviews. You've got to go walk the value stream. You've got to go meet the people assembling the parts, and you've got to ask good questions, right? And I think, getting out and communicating and being present is really important. And then as you wrap up, once you gain credibility and once you make sure the culture is aligned and you communicate, then it really comes down to measuring. And for me, I run a very intensive measurement-based operating system. I generally try to get the most talented financial people that we can find involved, partner them up with the most talented technical people, and have that natural checks and balances between the people developing the product and trying to solve the strategic problems and the folks minding the checkbook. Because in the end, we're responsible to our customers, we're responsible to our employees, but we're also responsible to our shareholders and our investors. And I think as an asset graduates into a private equity environment, it's really about making sure everybody understands what the expected outcome is, both from a timing and from a profitability and cash generation point of view. If you don't put that in front of people every day, then it ends up not being a priority.
Yeah, I'm smiling. I'm smiling because a few reasons. One, it is such a simple construct that is so not followed, right? In general, especially at the earliest stages. And I know you're not a venture guy, but I do want, I think one of the things I've seen time and time and again is you have really smart engineers, you have really smart technical people running companies, but you don't have enough of an eye towards, the business model and the financials, and also the investor and the shareholder management side of things. And it's actually one of the biggest things it's one of the gaps I've seen at the earliest stages of these, great businesses, great technical leaders, amazing technology. But either, there's a number of reasons. One, the vision of why this product is important sometimes is not there. There's also managing existing shareholders and new potential investors, and how do you have those conversations? Because oftentimes, someone who's been in engineering for the last 10, 20 years, whether it's at other companies or as an academic, has never had the experience of how do you actually, sell your vision to an investor? And then of course, it's just the general management of finances. Post 2020, 2021, companies raised substantial amount of capital. And I can tell you, I can point my finger to a lot of companies right now that have a lot of people working for them at the employee base that, you're starting to wonder what's going to happen to those employees, because that capital that was around in 2020 and 2021 is not around anymore. So there's some fundamental things that just, I think we're not done.
Well, and I think about that. That's one of the potential failure modes or risks that we see with some of these early stage space companies. And as a guy that's been very active from an M&A point of view, you can imagine it, to buy one or two companies, sometimes you have to look at 100. And one of the things that differentiates some of these early stage companies from each other isn't technology. The technology is generally good at all of them. What differentiates them is the business case and the operating leadership. And I'd say the ones that end up going through a sale process fairly rapidly and getting maximum value have a compelling reason to be in business, have a demonstrated ability to take the concept and monetize it, and then have at least an initial framework of an operating system and operating leaders that you have confidence that they can actually scale it. Very often I've had to pass on some early stage assets because the technology looked interesting and promising, but there was just way too much concentration risk with one really smart guy. And there really wasn't a maturity level in terms of turning a great idea into a business. And, that's what generally requires another couple of rounds of seed funding and a very strong board, but it doesn't always result in a great outcome, if those gaps aren't filled.
So we have a lot of startup founders that listen to the show. What would be your advice to them that might be, they may have just raised a seed round, they may have just raised their Series A, and they're listening to you and maybe they're thinking, holy shit, I didn't do that, or I haven't done that, or I'm not thinking about that. But like, what would be your kind of, initial sort of like, hey, make sure you have A, B, and C done and dusted before you do anything else right now?
Yeah, it's funny because I tell people all execution is people, process, and systems. And I would contend that good people can overcome bad processes and bad systems. So my recommendation is that once you feel like you've got critical mass from a technology point of view, and maybe even have had critical mass from a customer point of view, maybe you've got one or two customers that are, adopting your technology or adopting your product or service, that's the time to really slow down and make sure you've upgraded the infrastructure in terms of people. And some of the best founders and some of the best early stage technologists that I've met have been content to move into that chief technology officer role and bring in somebody who's had a couple cycles of learning in terms of scaling a business and filling out the rest of that leadership team. And I mentioned it earlier, I generally don't go anywhere without a really strong finance person to my right, whether it's somebody at the fund or whether it's the CFO at a company that I'm running. And then I'd say no less important is having a very strong HR leader on your left, and someone that really makes sure that people are the foundation of the business and that you're top grading talent and really getting the right people in place to, not for who you are today, but for who you're going to be in 12 months or 18 months or 24 months. I always try to back off from an expected liquidity event and say, all right, we expect to sell this asset at this point in time. What am I going to tell that group of investors that we're pitching to that leadership team is going to look like? And how can they expect that there won't be a gap in continuity, with that liquidity event? Because as you can imagine, very often when an asset sells, it's an interesting windfall for some folks. And maybe their desire to take the next lap is diminished. There's got to be succession and there's got to be bench strength at that point.
Right. No, that's a great point. So it sounds like effectively what you're saying, if I were to summarize, is some of the more common mistakes that founders or management teams make is they do reach that critical mass when it comes to technology or the viability of the technology. But the immediate next step really is to fill out the team with folks that have experience, and that could be just experience. Yeah, just people that have experience, whether at the C-suite, to help sort of bridge the gap as the company decides to scale its technology and commercialize.
Yeah, and I mean, it takes a lot of fortitude to make that decision because these early stage companies tend to be somebody's baby, and it's hard even with your own children to set them off and have them go learn on their own, or be a partner to a different group of parents, at university or in their career. I think the most mature and insightful early stage leaders that I've met understand when the concept of the projects reach the end of what they're capable of guiding, and they bring in others and they appropriately cede control. They can't walk away, but they've got to appropriately cede control and know that the next chapter is going to require a different skill set.
Right. Super interesting, Chris. Thank you. We have a lot to discuss, but we're going to take a quick break to hear from our sponsors. So we'll be right back. So stay with us. Space is the new frontier for cybersecurity. To quote the commander of the U.S. Space Force's Operations Command, cyber threats are unfortunately the soft underbelly of our global space networks. SpiderOak, the leader in space cybersecurity software, is dedicated to providing space operators with the solutions they need to protect hybrid space systems. Their Orbit Secure software uses a unique combination of end-to-end zero-trust encryption and blockchain distributed ledger, allowing missions to orchestrate and secure Earth-to-orbit, orbit-to-Earth transmission, communication, and storage of sensitive data across even the most complex and unsecure LEO and hybrid space systems. To learn how Orbit Secure can bring zero-trust security and resiliency to your zero-gravity environments, check out SpiderOak at www.spideroak.com. All right, Chris, welcome back. I want to talk a little bit about investing and the macro right now, the macro landscape. And I'll start off with a very general question, and we can start really digging in. As an investor, where are at a high level, right? Where are the opportunities? How should investors look at the space industry today? Where do you see more opportunities? Are you seeing that? Are you seeing that more on later stage M&A kind of roll up strategies? Are you seeing that at early stage? You see there's a lot of interesting companies with interesting innovations that haven't existed before. As an investor, and I know you're biased because you spend most of your career investing in companies that have something called EBITDA, which I know is not something we talk about very often on the show. Just maybe give us some light, shed some light on how you think about the industry as an investor.
Yeah, I'll look at it from a passion point of view. I think this is a generational opportunity. And maybe because I'm a little deeper into my career, I've seen, these cycles happen. You saw this cycle in the late 90s, with the internet. You've seen the cycle 10 years later with social media. You can see a cycle coming with artificial intelligence and machine learning now. When you look at that technology growth vector. When you look at, aerospace, defense, you had a comm growth vector. You've had, a lot of defense electronics growth vectors. The vector we have right now with, both defense and commercial space is pretty compelling because it's multifaceted, right? You've got, proliferation of launch vehicle technology really driving the ability for technology to go into the low Earth orbit versus the geosynchronous orbit. We're in the early innings, right? It's too early to say, but you're not going to get your cell phone and your comm, whether it's voice comm, data comm, visual comm from a cell phone tower or a wire in your wall. You're going to get it from a constellation of low Earth orbit satellites. And I think the concept of that being evergreen, to where you put an asset up, you reprogram it with periodicity, and then when it reaches a reasonable life point, you burn it up and you replace it. I just feel like we're still in the early stages. You think about this, the Space Defense Agency and the tracking, the transport, and the custody layer of the missile detection system. Right. Tranche 0 was like 18 satellites. They're largely up. Tranche 1 is going to be 150 satellites. And this is really still proof of concept, right? In terms of the ability to track a very fast moving target and to potentially use artificial intelligence to make decisions relative to intercept, which sounds like heresy to folks that have worked on the defense side. Same is true, for SpaceX and Starlink and Kuiper. Okay, you've got 2,000 satellites up in the Starlink, constellation, high infant mortality in terms of launch, high mortality in terms of even in situ, and very early in the stages of adoption from the user community. So I just feel like we're in the early innings of what will tend to be a very long cycle. I'd say in the early portions of a cycle like this, you see a lot of technology development. So that's why the venture capital world has been, very, very busy. It's around incubating unique technologies and getting them to scale. And fortunately, there's been a fair amount of, government, both classified and unclassified funding to support some of that, which has been helpful. And then there's the commercial portion of the cycle, which has been driven by some of these really high net worth players. And I tongue in cheek tell people, if billionaires are going to go spend money on some particular product or service, it is fairly compelling just to follow them around and get a piece of the action. And that's effectively, when you think about what Bezos is doing with Blue Origin and Kuiper and what Musk has been doing with SpaceX and Starlink, there's a case to be made to just follow them around and find ways to be useful in that supply chain. And it can be very enriching, because I talked about earlier, that volume ramp and that compound annual growth rate of developing launch vehicles and developing satellites and developing all the affiliated equipment for ground stations, is an enormous piece of addressable market. And if you can get an interesting piece, the growth rates are really, really nothing to run away from.
Yeah, and I would say, from my perspective, nothing you've said that I would disagree with. I think at the long arc, space is truly a generational opportunity. Significant. A lot of people are going to make a lot of money, right? Said really simply, and I think that's certainly true, especially if you look at over a longer time horizon. Now, I do want to talk a little bit short term. So, if we look today, and look out the next 12 months. There's a significant number of aerospace companies looking to raise capital, some that are in the process of raising capital right now. And I would say, when I say the companies that I'm really referencing are any businesses that's raising more than 50, 75, $100 million in the market. And a lot of those fundraisers have been extended. What was thought to be 3 months is now 6 months, 12 months, some with no end in sight. What do you think is going to happen over the next 12 months? There's a number of really great businesses that have raised a lot of money and now still need a lot of money, but they're at risk that the capital providers are not there, right? These are companies where it doesn't really make sense for private equity outside of maybe capturing IP or contracts because, there's not like a business model there yet. On the growth side of the business, like traditional growth investors typically look for, pretty strong revenue numbers at this stage, or they look for pathway to profitability. That's not there. And for the venture guys who would invest in those types of companies, there's just the rounds are too big for them, right? From a check size perspective. Now, I'm painting a bit of a bearish scenario. That's certainly not always the case. And for a number of these companies, they will figure it out. But I am kind of curious, what do you think in terms of the fundraising and capital raising environment? What do you think will happen over the next 12 months?
Yeah, no, I mean, and it comes down to uncertainty. I think if you think about what's driven some of the challenges with capital deployment, it goes back to the Fed and interest rates and the macro economy. And when people look at places to park money, they're looking for effectively they're looking at risk and they're looking at return. And people can park money and from a risk-free point of view make 5, 6 plus percent. There's a lot of dry powder on the sidelines right now trying to figure out what the end market looks like. Now, I will say that the generational opportunity in space and the compelling need to mature technology is going to make some of the better assets look good in comparison. I think one of the areas I like an awful lot is optical comm and development of inter-satellite communication networks and air to ground communication. I mean, no one's really figured out how to make a handset yet that interfaces well, with all this nascent, both voice and signal and video, feed that comes from space. So I think what's going to happen is it's going to be a second sorting out of the business models. And people are going to look at the technologies and they're going to look at the maturity level and say, all right, do I see an accessible piece of market for this solution? And do I believe in the growth rates? And do I believe in its ability to get to critical mass to where it becomes profitable and generates cash? I don't think the venture market, the early stage market, is going to converge to zero, but I do think there was a lot of roulette was being played with the chip on every number of the field, a year or two ago. I think people are going to look at the statistics and say, hey, you know what? Double zero is where I want to be because they've got, a high probability of getting to where I think I can monetize my investment. So I just think it's going to shake out some of the better business cases and some of the better assets. I think the capital's still there. I just think it's being a little choosier in terms of where it's going.
Yep. Yep. No, that's a super fair point. I want to go through a few different sectors real quick. These are areas that we could spend a whole episode just talking about specifically, but I want to get your very, very high level thoughts on each of these areas of the market as an investor or from an investor's perspective, right? So let's just start off with the obvious, the sexy, what everyone talks about, launch. So
Yeah.
what do you think about the current launch market? There's a lot of different players out there. SpaceX is a beast. They've effectively built a monopoly. Whether they can keep that monopoly over the next 10, 20 years is up for debate, but they are the beast in the room right now. What do you think about the launch sector?
Yeah, no, they are 100% the beast in the room, and they've created, a repeatable and predictable service. I mean, you've got the United Launch Alliance, you've got Ariane Space out of Europe that, from a legacy point of view, have been able to demonstrate on a much lower frequency and maybe even a higher lift basis reliability, but the volume's not there, not at least not in the neighborhood of where SpaceX is delivering today. I mean, I think the flashlight's been on Blue Origin for a while, and can they scale? But I think the Rocket Lab and the Relativity and some of the other maybe non-traditional players probably bear an awful lot of review and studying, because they've very quietly been able to mature technology rapidly and appear to both be appropriately capitalized to get to a point where they're a realistic alternative. Once I get beyond that part of the pyramid, and get down into some of the niche players, my confidence level wavers. I mean, space is hard, right? Lifting a payload and exiting the Earth's gravity is a very difficult thing to achieve. When you think about what it takes for either a solid fuel or a liquid fuel rocket, and all the things that need to go right and reliably deliver performance with high frequency, for unmanned, let alone for manned flight. It's an audacious thing. So I think there's going to be a lot of pressure to not have SpaceX be a monopoly. I think I see today money flowing to some of these other players in order to kind of level things out and make sure that SpaceX doesn't take a full advantage of their pricing power. And I would expect, once you get one or two of these assets a little bit more mature, you're going to see one of the traditional defense contractors come in and either take a stake or take them out and continue the incubation. Because, as I said, we've got a generational opportunity. However you look at it, commercial or defense, the number of launches is going up, the number of assets going into space is going up, and there's an opportunity to make money. And it's not going to be a monopoly for long.
Yep. Let's talk. Oh well, actually, let me bring up sort of the obvious sort of um, stat to discuss here within launch, which is that you have SpaceX, right, valued somewhere between 140 and 150 billion per the last tender, last round, and you have every other launch provider out there it's a fraction, maybe 5% of that value at best, and then it begs the question, well, what's driving the value for SpaceX? And, there's a lot of debate out there of, how much of that 140, 150 billion is attributable to launch, how much of it is attributable to SATCOM and Starlink effectively, and sort of what else is out there, right? Interplanetary colonization and Starshield and all that other great stuff. But clearly a huge value driver of SpaceX right now is Starlink. So let's talk SATCOM for a second. So right now, at least the broadband side, dominated by Starlink, right, in terms of LEO. Are there other LEO providers that can stand up here? Do you think that there's and maybe the first question is do you believe that satellite broadband is a viable business model in LEO? And then the second question is, if it is a viable business model, is Starlink going to be the main provider or the only provider?
Yeah, I mean, one, I think it's viable. I think the technology's at a maturity level to where you can network of low Earth orbit satellites, have appropriate redundancy, and similar to a wide field of view geosynchronous orbit, deliver communication data almost anywhere on the planet, right? So if you can get that right and get it to where it's continuous and reliable, at the appropriate price point with an interestingly usable handset, whether it's a base station in a house or business or on an aircraft or in situ like a cell phone. I think once again, proliferate broadly. SpaceX has got a huge first mover advantage. They've learned a lot of lessons in terms of both launch organization. I mean, you've gone from version 1 to 1.5 to 2.0 on the Starlink satellites. They've grown in size pretty dramatically. They've learned a lot of lessons. It's fairly, well protected, but, deep within Amazon is the Kuiper project, which is, interestingly enough, also located in Redmond, Washington, which is where Starlink's fabrication facilities are. And, I don't think they've delivered their first two birds to orbit, but they clearly are working growth vectors behind the scenes to get to a very high rate of production. And I think both organizations are foreseeing, 25 satellite a week type production levels over the next couple of years. I think there's some smaller players and there's the traditional players. There's the Viasats and there's the, Maxars and there's the Telesats. And, in the end, you could end up having a hybrid approach where there's some teaming between guys in near Earth orbit and low Earth orbit, making sure that there's coverage for sea. So I think the business case is good. I think SpaceX, Starlink's got an enormous first mover advantage. I think there's a lot of money being spent in other places to compete. And it's a little early to tell because you just don't have broad adoption yet, and you haven't gotten through enough cycles to where the consumer buys into the fact, or businesses buy into the fact it's a solution. Having lived through the Iridium cycle, nearly 20 years ago, it's all about price point. It's all about service level. And I'm not quite sure we're at a demonstrated level yet to where you can say, yeah, this is going to scale like Netflix did a couple of years ago.
Sure. I was going to bring up EO as another area, but I think there's a number of comments you've made that are very applicable to EO. So let's pause on that for a little bit. I want to talk about public markets. So what's going on with public aerospace stocks? Let's start with the primes, right? So the S&P's up somewhere in 12-13% year to date in terms of return. Meanwhile, you look at the primes outside, I think, of Boeing, they're down 10 to 30% year to date. So what do you think's going on there?
Yeah, I think some of it's got to do with concerns around what the government budget's going to look like. So I think this year people understood where the money was flowing from a programmatic point of view, get the future forecast and make some decisions around a valuation model. I would contend that, there's a high likelihood right now that we have a government shutdown. There's some concerns around, bill paying in terms of the entirety of the defense budget going forward, and picking winners and losers in terms of programs. Historically, F-35 program was a big winner in terms of defense budgets. Some of the AESA radar programs were big winners. I think those winners are shifting a little bit. And anytime you have, volatility or uncertainty, headwinds get priced into the equity. And I would contend that some of the larger primes, there's just some confusion as to, who the winners are going to be over the next couple of budget cycles.
Right. Fair. What about the pure play space stocks? Sorry, I didn't mean to laugh, but they're down 20 to 9, like anywhere between 20 and 95% down on the year, right? And that's just year to date performance. If you actually take a look, if you actually mark them against their, call it IPO or SPAC sort of like target, they're down 80-90%, right? So why don't I just keep it high level? What do you think? What do you think?
I think you've got 5 or 6 really large, or 5 or 6 space companies: the Rocket Labs, the Mynarics, the Virgin Galactics, the Redwires that SPAC'd out at that, at that $10 a share level. There's not a single one of them that's in, even 50% of the SPAC value. So I view it as kind of a rebaselining. I think a number of those companies have interesting business models. They've got great market position. A few of them have had actually a pretty good run the last 6 or 9 months, coming off just some unbelievable lows. I put Terran Orbital in there as well. They've had some really great successes, but I think they're trading under $1 a share. So I think you've got to look at
93 cents. I was actually looking at them this morning.
Yeah. So, but you think about it, they've got the bus on the Lockheed birds for the SDA, Tranche 0. And they've got a high likelihood of having the bus on some of the later tranches of SDA and perhaps some of even the commercial birds. So, I look at that group of 5 or 6 SPAC out space businesses. I'm glad I wasn't in the initial group of investors when they came out. Probably glad I stayed away from them, a year ago, but I would start looking at them today as ones that have a higher than good likelihood of surviving what'll eventually be a defragmenting of the supply chain and a defragmenting of the haves and the have-nots. Some of the fact that they've had hard knocks early has probably helped shape them in a positive way.
Yeah, I was looking at Planet Labs earnings or Planet's earnings recently, and I think their recent earnings summarizes a lot of the issues that some of these companies are having. And management did lower their sales outlook again. And I think there's two things that stood out in that earnings report. One, which is that they effectively came out and said sales cycles have elongated. They've cited both on the commercial and the government side. And the other thing is, obviously the industry's early on the adoption curve. We talked a little bit about that, but the larger contracts are taking a lot longer to close. And I think it's just interesting to see that because clearly the government wants to increase their level of integration with these companies, but that just when it comes to the bigger awards, you're seeing a lot of small wins, but the bigger awards you're really starting. There's just far greater scrutiny than I think that these companies originally assumed that would be the case. Now, with all this being said, this was a pretty hot summer for M&A. You had BAE and the Ball acquisition, which I believe was BAE's largest acquisition. It was like something like 5.5 to 6 billion, 5.6, I think to be exact. Not quite M&A, but KKR took a stake into OHB. I think they took a minority stake in that company. Dish acquired EchoStar, more 1.8 billion. Now this is more I would call traditional aerospace than M&A happening in new space. But what's your sort of like M&A outlook over the next 6 to 12 months? Given there are all these companies that have SPAC, there are all these companies that have good assets, like potential look through and pipeline to great contracts. Like what do you think will happen?
Yeah, no, I think the M&A engine is still going to be strong, and it comes back to concentration risk. Some of these companies tend to be fairly narrowly focused, and as they grow, one of the ways to reduce that concentration risk, whether it's revenue risk or market risk, is through M&A. And you can see some of these smaller players getting taken out by the larger players. And even BAE taking on Ball. General Atomics just announced EO Vista last week. You see some of the larger traditional players trying to get in early on some of this technology that should have good growth rates. And, the sellers are looking at this and saying, hey, you know what, we've got a really great position in a portion of the market. But if that portion of the market, we have slow contract awards or we see some programs move out, even of our own accord, it exposes us from a model point of view. So I think, some of that concentration risk is going to drive additional M&A. And I think some of the realization that that this is a generational opportunity is going to drive some of the bigger players to not try to do it organically, try to do it through M&A.
What do you think? What's your outlook on the IPO market?
Yeah, that's interesting. I mean, the IPO market generally requires a little bit of scale. Obviously the fees involved with taking a company public and listing it on one of the public bourses are significant. So you generally have to incubate a company to a reasonable size before it goes through an IPO process. Now, the SPAC process was the shortcut. I think what you'll see is that you'll see more later stage growth in private equity involvement, scaling assets, getting them to the point where they're large enough to go through the traditional IPO process. And then I wouldn't put it past some of the SPAC'd out assets becoming acquirers at a point in time. I think there'll be ways to do successive rounds of equity raise and use that to pay for acquired assets. And that's historically been used by all manner of companies. Is that if you've got a really accretive asset and you announce that you're under exclusivity or have intent to buy it, doing a round of equity issuance to pay for that, as long as it's viewed as accretive, as a path that you can go down.
Yeah. I got a two-parter for my last question for you, Chris.
Yeah.
Somewhat related. So the first part of the question is there any kind of breakthrough innovation or technology that doesn't exist yet that's being developed or we're starting to hear about that you're most excited about in the industry? So that's part one. And then part two, somewhat related, is if you had to put on your venture capital hat, let's dig it out from let's dig that hat out. Put that hat on, your VC hat, and you were starting a fund today, brand new fund. what are the areas of the market that you would put dollars in where you would deploy? So two-parter.
Yeah, no, so it's funny. So the context that I think about, and I think largely around the communication portion of space, and I think about the entirety of the electromagnetic spectrum, so from radio waves to microwaves to millimeter waves into the electro-optic and the optical spectrum, and the opportunity to both collect, process, and transmit information is what is interesting to me. And I come from a traditional defense biased view, to where you would collect the information, eyes and ears, listening to things and seeing things, encrypt it, transmit it, and it would be post processed on the ground. I think with algorithms and AI, that processing some of that in situ prior to encryption and transmit is both interesting and a necessity, given the speed at which aggressor projectiles move at. So I've been very interested in ways to speed up the processing and transmission of data, and it really comes down to two places. It's the sensor, it's the processor, and then it's the mode of transmission. So radiation hardened, high performing processing with red-black boundary, to where you can actually isolate, classified versus unclassified processing is interesting. And then, post-collection transmission of very, very large packets of data. So both the, amplification and transmission, and then the mode of transmission. So I think, there's still a lot of frontiers in both, interstellar optical comm. I think there's some opportunities in air-to-ground optical comm, or air-to-aircraft, multi-domain optical comm. So I think that's areas that I think are interesting, and there's some physics and some challenges and some materials issues that need to be overcome in order to really optimize how we transmit information amongst the nodes of what the future conjoined comm system looks like. If I was going to look at early stage venture today, I would probably be thinking very much in terms of technologies that can be used multiple places. One of the things I've looked at recently is alternates to the GPS, places where GPS could be spoofed and denied. And are there other ways of using LiDAR, or using radio frequency localization techniques as an alternate to positioning data. So very often, every time there's an advance in technology, there's an advance in countering that technology, or attempting to spoof or alter that technology. So I kind of always look at the reciprocal, look at the solution, and the reciprocal of the solution as opportunity area.
That's great. That's super interesting. I wish I asked you this in the beginning, because I have a lot of follow-up questions, but we're out of time, and luckily Chris is going to be at our November investor event as a speaker. So for those listening, those attending, that will be an amazing opportunity to ask Chris some of your follow-up questions in person. But Chris, really appreciate you taking the time. Thank you. This has been great. I know we covered a lot of ground, but I had 50 minutes with you, so I wanted to make sure I got snippets of all the great things that you do and your work on, and all the views that you have on the market. But really appreciate you spending time with us today.
No, I appreciate the opportunity, and appreciate the opportunity to share my passion and interest in advancing technology and advancing business cases in the space and electronic domain. And I really do think we've got some interesting years ahead of us. And I'm excited to kind of see how things morph and combine over the next few years as we kind of move up the maturity curve for this portion of this chapter of space.
Amazing. Thanks, Chris.
Yeah. All right. Thanks.